Welcome back. You're watching the newsroom with me, Shel D'Souza. Let's connect with the management of Punjab National Bank. We have Mr. Ashok Chandra, who is the MD and CEO of the bank, joining us right now. A very good afternoon to you, sir. Thank you so much for joining us on ET Now. And let's talk about the earnings first up, because let's address the fact that the loan growth for the bank has remained, has done remarkably well. It is well above your guided range as well. Usually, if you see Q4, it's a strong one coming in for banks. And given such trajectory, will it be fair for all of us to assume that the growth will remain well above your guidance?
Absolutely. The guidance which we have given, that is 11 to 12% growth in the credit. I think definitely we are going to beat this guidance.
Right. So your deposit growth, that's largely been led by the term deposits. So if I look at the cost of deposits, that's actually gone up by about 7 basis points sequentially. So your Casa is also facing some pressure. So how do you see all of these numbers? How are you planning to bring in your Casa growth?
It is the fact that there is a mute growth in the Casa, and that not only for our bank, for the entire banking system, that is the biggest challenge. Of course, there is some growth in the Casa, which we have seen in our portfolio. But there is a strain on the Casa growth, no doubt about it. So we are analyzing our products now, and we are going to fine-tune some of the aspect, whether we can add on some facilities in the Casa product, whether we can go for the segment-wise the Casa product for the salaried, non-salaried, pensioners, for the women, youth. I think those are the things that is required in the system as of now. And we are going to review our entire Casa product, going to have a big customer connect with the branches, and we are also going to have the improvement in our entire customer service going forward. So having the customer connect, improvement in the customer service, and in the long run, maybe in the next financial year, we are also going to have that customer relationship manager in the key branches of the bank. So these are the areas definitely that is going to bring back the Casa ratio which the PNB used to have. And I think we are all poised for a good growth. We will be doing it.
Mr. Chandra, so if we have to put this in terms of recoveries, you said that you are aiming about 18,000 crore rupees this year. But given it's the last quarter that we are in already in Q4, do you expect any big recovery to come through?
18,000 crore is the guidance which we had given in the beginning of the financial year, and already 11,500 crore recovery has happened. So the target level, the gap is around 6,500 crore. And I am very sure that the system and the activity which is happening in the bank, definitely around 5,500 to 6,000 crore recovery will happen overall now. And there are some accounts which we were expecting that recovery will happen in the Q3. Those accounts are getting matured now, and this recovery will happen in the Q4 itself now. There are recovery I'm expecting from the NCLT around 500 crore and from NARCL 496 crore. So both put together itself is around 1,000 crore recovery, and both this 1,000 crore recovery is will contribute to my TWO recovery. So I think we are all poised for a good recovery in this particular quarter now.
Right, sir. So if you see in the quarter gone by, your asset quality actually remained pretty healthy, but still you've gone ahead and revised your gross NPA and credit cost targets downwards. If you could help us understand, what are the green shoots that is visible to you, given in this sort of an environment where banks are actually going ahead and closely assessing their asset qualities?
The first aspect is that recovery is happening robust in our bank now. Last year also, the good recovery was there. This year also, on a quarter-to-quarter basis, good recovery is happening. And in every quarter, I am seeing that recovery is higher than the slippages. And in a true sense, like recovery in the gross NPA, that is higher than my slippages. So without any technical write-off, I am able to reduce my overall the gross NPA in a big way now. So this is one thing. And the second thing is that my slippages, which is fully under control now, and every quarter, if you see, my average slippages is in the range of 0.36%, and overall for this particular quarter is 0.68% is the slippages ratio. So from the slippages point of view also, we are fully under control now, And see, if we are doing well in the recovery and if my slippages are going up, I think that tarnishes the entire efforts which the bank has done now. So the slippages management department and the recovery both are doing exceedingly well. And that is the reason you are seeing the good number in the gross NPA and the net NPA.
Right, sir. And lastly, more than 50% of your book is floating rate linked. So if I'm not wrong, that is. But with this changing dynamics, rate cut expectations are rising. And we have the MPC meet later this week itself. So how are you planning to sail through the rate cut in the near term and protect your margins?
See, our 50%, 52% book is under that RLLR and EBLR book now. And we need to wait and see that how much the price cut happens, rate cut happens. And see, the rate cut, when it happens, it not only it will affect my credit portfolio, it will affect the deposit side also. Yes, it is true that it takes some time to maturity in the deposit side. But I think that will also going to happen in another 2-3 quarters. If anything happens, the rate cut happens in this particular quarter. And in this particular quarter, even if something happens, I think that is not going to pose much challenge in this particular quarter now.
All right, then. All the best for the coming quarter and the year ahead. Mr. Chandra, thank you so much for joining us on ET Now to talk about the quarter gone by for PNB and what's the way forward going ahead.